What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do provide current updates on this channel as well as daily content on my Twitter feed at Hemi137. So follow me there for daily updates to get you informed for what is currently going on during the day, as the market is very dynamic and changes every minute, every hour on the hour. And so you too have to be dynamic. So, with that being said, before we get started, make sure that you go ahead and drop a thumbs up and let's roll this guy out. So, I got a lot of interesting information going in. Again, this tail end of this year, there isn't really going to be a lot of information that is going to really change the market. And something I try to emphasize before coming into these last couple of weeks, you're kind of in holiday mode, so really there's not going to be a lot of really impactful things. But again, you have to understand that what we're trying to do is the Fed, the administration are trying to push this thing to the next year. They want to see what happens in this quarter earnings, which is reported on the 15th of next month in the new year. So we'll get Q4 earnings in Q1 of next year. I know that can sound confusing, but the Fed wants to know where the consumer is at. So with that being said, there was still some very key information coming into this last week and going into this next coming week. Essentially, this next coming week is going to be essentially pretty much the last little bit of information we're going to get before we start getting into earnings mode, which is going to take about, again, not till about the 15th of January. So between now and then, you're going to see a lot of volume potentially dying out just in the market, just because there's no news. And the market hasn't really been moving unless there's some big news events, scheduled events, or some unforeseen event that may occur, which is always a possibility, aka a black swan event, could always be in the pipeline. So that's something you have to be mindful of. So with that being said, let's go ahead and drop into the weekly recap. So the biggest thing that we were looking for this past week was non-farm payrolls. We had JOLTS numbers, which those job openings have dropped quite a bit. I believe it was close to about 1 million. But nonetheless, the non-farm payroll, they added 199 jobs versus 180 expected. Again, you have to remember in the last jobs report, they were expecting like 250. It came in like three something, and then it dropped all the way down to like 175, and then now it barely bumped up, and then now we are potentially, and this isn't even without the revisions, but it's something we have to keep in mind. When we look at revisions, we've been in a very, very steady decline on people getting laid off left and right. And to look even at what unemployment rate is at, or just 3.9, I think it's a lot worse than what's actually being advertised. The way they do those jobs numbers, it's very diluted in how they define what it is, and they try to keep it that way so that way they can essentially fudge the numbers how then they want the narrative to be painted. And this is something I talked about. And the longer you are in the markets, the more you read up on the stuff, the deeper you dive a couple levels down, you realize that this stuff is very obvious. It's right there in front of your face, but if you're only reading headline news, you will not really determine what is really going on. And again, this is why I do this channel, not only to provide the information, but I try to look at good stocks and crypto and everything else, other assets in the markets, to try to help navigate this current wreck essentially that we're in. That we're not in a recession, but actually a depression. So, with that being said, this is again the prime opportunity. This is what we need to look at as a prime opportunity, and why I have with the channel, because during bad times you can rise from bad times by taking advantage of the bad times and positioning yourself ahead of time, not when stuff starts to hit the fan. So with that being said, again, the non-farms coming in, again, I think those numbers are very misleading. It's really, again, all dependent upon expectations, and we've seen this with earnings. And if the expectation, they're expecting, essentially expectations are really low. So if we beat that, then that's a good thing. But in fact, things are getting much, much worse when it's coming to jobs. We're starting to see it reflect a lot more. And the new year, I think, will bring a lot more heavier hits. and I'll start talking about that here in a second once I get into some of these other bullet points. But the rate cut shift from March 2024, which we've seen it shift a lot, to May 2024 after jobs report. Again, a lot of these numbers, and this is where you can't really go off the projections because the projections keep shifting. Again, we were supposed to get 4 rate cuts at the beginning of or the end of this year, and it didn't happen. It's been kicked down the road a couple more months. Again, we have to remember Bitcoin halving is roughly around April as well. So I believe it's April 14th. And I think around at that point, you got also spot ETFs that are trying to get approval. We're getting more news about that. So a lot of stuff is kind of aiming for roughly that February, March time period. Again, a big baseline move I've been talking about for a while is when all that will essentially around February 15th will be kind of like the end of all the big industry leaders reporting about Christmas earnings. And then at that point, the market will make a decision where it will head. And so again, we were going to have to see how that plays out, but it's roughly around springtime of next year. Again, I think if they can manipulate the market and get past a big crash around that time period, I believe that we will be going all the way till after election before anything happens, potentially not even until the year after that. So talking like 2025 could be a possibility if it doesn't, I think, do some sort of major move by March. So we'll see around that springtime period. So we'll see what happens there. So with that being said, we are looking at seeing a decline in spending growth because of student loan repayment. Ever since student loan repayment has come back, we're starting to see people starting to slow down on spending. And something I've talked about spending and what's currently been going on with that is people just, they're working 2 full-time jobs just to make ends meet. Now they're getting more money reduced out of their essential checks to pay student loans. Some people just aren't paying it just because they can't afford it. And so they can't afford to put a house over their head, a roof over their head, and essentially feed themselves. And so now you're having to pay student loan repayment. Now there's been some student loan repayments through the Biden administration, but again, to be able to qualify for that stuff, it's very hard. I think if you are a government employee, you can qualify for it. And then there's some really heavy stipulations that you have to be paying for so many times without any actually missed payments. I think it's over 20 years or something like that. So it's not a very easy thing to get qualified for, but it is out there and is essentially removing student loan repayments for some people out there. And so with that being said, the leading indicators are down. When leading indicators are down 10%, we never escape a recession, per Kathy Woods. Now, if you don't know who Kathy Woods is, she's essentially the CEO of ARK Invest. She does put out some great research information out there about different stocks and new innovative technologies. I think she has a very good insight into a lot of different things and shares all her research. Her team does. So it's always great insight. And every time there's a Nonfarm, she's been doing like updates around like current market sentiment. Which has really been insightful to kind of get her opinion. Again, none of our opinions are always accurate. Again, they are an opinion, but it's always good to form a thesis. And something I talked about is you have to develop your own thesis. And so if you have multiple sources, like 2 or 3 sources that are really strong sources, you use those sources and develop your own thesis. This is where critical thinking is extremely important. And like what I always state, I don't try to think too far ahead. 6 months is even still too far ahead because the market can change so quickly. But what I like to do is use technicals, use scheduled events, and essentially look at what other potential gray swans are out there, which are essentially potentially known issues that could cause market corrections. And then the black swans, which you never see coming and they just happen, right? Like the pandemic it wasn't really a black swan. It was more a gray swan because we knew about it. But it took months for it to actually hit us because, again, there was multiple other different diseases that have been out there that really haven't done anything. So until it actually makes a true impact, we don't really know. So again, there are events that we know of and events that we don't know of. And right now, we're in a period of time which there are a lot of really bad just sediment across everything, whether that's, looking at what's currently going on with Ukraine and what's just the world issues and the world economy in general, there are just so many bad things. You can list off so many bad things that are currently going on in the economic environment, and watching China getting crushed, their whole economy is getting crushed, watching Europe getting crushed. And then over here in the US, we have Yellen and Biden, and we have Powell essentially saying we're strong and resilient. We've officially reached a soft landing. There is no inflation. All this stuff is not true. We're seeing that. And something I don't really talk about was the M2 money supply is at some historical low levels, and that we haven't seen since like the Great Depression. And what could be occurring, and this is something I want people to be well aware of, and even though we may get interest rate cuts, it doesn't mean the economy is going to start getting better. First off, you have to understand that what happens is when we do start getting cuts, that means things are really bad. So at some point, what's going to happen is that unemployment is going to skyrocket because of the dramatic drop in M2 money supply. And what's going to happen is when that does catch up, because that's a lagging effect, when that catches up, you're going to have the Fed start cutting rates. That doesn't mean the economy just starts recovering after that point. What it means is that the banks could they could start giving loans, but you have to understand, when everybody's losing their jobs, do you really think the banks are going to give out loans? If you think about that, if the unemployment rate reached 6%, is the banks going to give out loans? The banks will not give out loans. And so this is where it could lead to not inflation, but deflation, period, to where that demand is just absolutely getting crushed, because nobody can afford it. Nobody can afford it now. If some people are just spending to spend because it's the whole FOMO thing going on, and just life. People are just trying to live life, and they don't like the current market, so they're just putting stuff on debt. I've talked about this before. And so again, when it comes to the time where interest rates come down, there won't be a big demand there because people just won't be qualified. And the banks aren't going to put that risk out there. We're seeing banks reduce risk by closing branches, right? And so it's building out this thesis on what's actually going on, and realizing that it's just because we start cutting rates doesn't mean things are better. Things will get a lot worse. A lot more people are going to lose their job. It's going to be a lot harder to find a job, and then people are going to be liquidating homes. And some of the key indicators I've been watching specific just areas for housing, and I've noticed housing has been on houses have been on the market for longer. Houses are reducing prices, but like 20, 30, 40K at a whack. And then you also have trucks is a good indicator as well for, you want to look at automobiles. Trucks have been selling for like 100K. And they have like been slashed in half. And these are the big drops you have to watch, right? We aren't in a good state, and it will get worse. And this is something you have to understand over the next perhaps decade. Things will be bad. And at some point, I do believe we will start turning around, but it isn't going. My main key thing I want you to take away from this is that things will gradually start getting better in the economy. It's not saying that the stock market, I think, will correct heavily. All things will correct. Your housing, your automobiles, stock market, everything is going to correct, I think, accordingly next year. If it doesn't happen around that time, could potentially get kicked out for another year. They do this all the time, is they continue to kick that can. You know what the narrative is, but ultimately, again, when I start looking at technicals, that 4,600 level is being there's a purpose why it's being guarded. And if we break over it, I think there's a strong possibility we could go to all-time highs. But if we can't, again, I've talked about breaking major supports. If we don't stay up for long, that's an issue. If we wick back down, if by Monday we break over 4,600 and we wick back down, that is going to be a problem. That was a liquidation spike. And so all the people that FOMO in saying, oh, it's a break, we're going to go back to all-time highs, you've been trapped. They are looking for liquidation. So institutions are looking to liquidate their long positions and go short. And guess who's going to liquidate them to be able to do that? All the people that are, we're going back to all-time highs. and that's the way things are going to be. So you have to be very careful. And this is why I say when markets like this that are so uncertain, there are times when it's not as bad, right? But times like this when there's a lot of uncertainty, you don't put full risk on. This isn't the kind of market you go in putting full risk on and try to swing for the fences all the time, right? You're looking at singles and doubles is pretty much what you're looking at. And yeah, you may get an occasion home run, but you definitely have to be very cautious. You can't be swinging for the fence all the time in this kind of environment. So with that being said, again, like I said, Kathy Woods she's saying that she's been saying that we've been kind of in a recession for 2 years, something I've been talking about as well. We're not in depression after, what is it, 6 months. You are officially in a depression. You're not in a recession. We are in a depression, a global depression at that, and it's going to get worse. And it will take some time it'll take a decade to get out of this 100%. But it's not saying we won't start recovering and we can't be profitable out of this particular event. So those are things you have to be mindful of. But we'll continue to watch and we'll continue to see. So upcoming events this week, we do have core CPI, which is going to be important. I think to some extent, again, if it starts to rise, that will be an issue. But we already see the pencil whipping as they dropped it because of healthcare being slashed by 35%. I don't know anybody whose healthcare has dropped that much. So again, they are still fudging numbers, I think, trying to push us at least to get us to the new year. At that point, they may not be able to control it around February, March period, but we're going to have to see. And if they can control it to some extent, they will push this thing out till after election. And then you may not see, again, a heavy correction till the February, March of 2025, maybe that possibility. This is why I don't like to project a lot, because a lot can happen throughout the year. Black swan events can happen that we aren't aware of, and we could just correct. So and then we got core PPI on Wednesday. I don't think it has as much weight. They have a lot of emphasis on this. That's what the Fed's watching. I think the Fed watches the earnings. They don't really watch this data because they know how much this data is skewed. So I think it just kind of gives them a little taste of what to potentially be happening for the earnings. But the Fed watch the earnings, right? Everybody should be watching the earnings. What are these companies reporting? That's what matters. And so that's what we're waiting for is the next earnings cycle. And then again, these are the last two monetary policy and core inflation reports of the year until the new year. So we will go from there. And again, upcoming earnings, there's always earnings going on throughout the quarter, nowhere near as impactful as probably the first 3 to 4 weeks in the new earnings cycle, because that's all your industry leaders. And aside from that, nobody really cares about the rest. And I've kind of already talked about the other ones that had a good pulse on the market. They don't move the market, but they have a good pulse on the market, and things are looking for a steady decline. You're like your Home Depots, Walmarts, Targets, Lowe's, those kinds of ones are your pulse on the market. FedEx are the pulse on the market that are telling you what's about ready to come. And so you're seeing a lot of, people aren't buying packages and sticking packages. That's not a good sign. And so, again, things you just need to be mindful of. So this week, we will continue to watch as this list here. There hasn't been a big movement. See, this is what I've been talking about. And this is why I've been trying to keep last week's essentially movement here, because SPX really isn't planning on doing too much. They raised it 1 more point. Now, this is about roughly average, maybe a little bit below average for the SPX. So the market in general isn't pricing in a lot. And then the rest of them, you can see they aren't really priced. They aren't really moving. They're getting to a dead period where you're not going to get a lot of news. And again, everybody's going into holiday mode. Volume really dies down at the end of the month for Christmas, and then for the New Year's is pretty dead until we start getting into that earnings mode, and then we start getting bank earnings, and then your industry leaders at that point. So again, that's what we have for that. So with that being said, let's take some time and look at some charts here now. Now, that's a lot of information to digest, and I'm trying to set this up to trying to help shift all that information into here. That's why I have the zones. The zones are your targets. That's what we aim for, and kind of align your targets along with scheduled events and what could potentially be playing out. These are things that you have to be mindful and very careful of. And also where, you're playing around these zones, you can place stops right out of these zones. So if for some reason you're expecting it to go up and then you have some random event happen, you're at least tagged out, so you're not riding this thing all the way back down. and then you could just pick it back up at one of these other zones. So with that being said, SPX it broke 4,600 uh, right as we closed for on Friday. But the thing is where are we going to open on Monday? That's ultimately the question. If this thing pops up, it could be a liquidation spike. Again, we are very close. We're roughly about 200 points away from all-time highs. So we will see. This is a true battle. If we can break above this and go back to all-time highs, would be pretty incredible, to be honest, especially with the amount of junk. This is not normal this year. And something I talked about, remember, I talk about this multiple times, is that when we are officially paused on rates, the market tends, now this is if the yield curve is inverted, the market tends to run for 2 to 3 months. From that point is when you get your, essentially roughly after that, shortly after that, you get your cut, which prices in a recession. Again, this is just alpha historical technicals, right? That's technically what happens a far majority of the time. And we go off of probability and try to use that to our advantage. Again, it's not always 100%. Nothing is 100%, or else people would just be making billions of dollars in the market and nobody would have to work and it would just be that easy. But it's not that easy. So with that being said, we'll see. Again, we've gone roughly about close to 2 months. And so we will see how this is going to play out. I was kind of expecting this year to kind of just chop around here. But again, I wouldn't be surprised if we push up. And I talked about the back half of the year, we would potentially start running up. And that's exactly what we've kind of done. Now we've reached a new higher peak here. If you look at this, if you scale this out a little bit more, we are trying to break that. The first attempt, it failed. We started to sell off and we picked back up. And again, we're trying to break this. If we cannot break this, again, I think if we cannot break this and we hover around here for another couple weeks, I think that is a very, very bad sign of what is coming. Now, it's not saying we can't rip up a little bit, to 46.50 and then just get rejected. And that could be a liquidity spike. And then, because this is what I talk about, right? You have this level, this 4,600, and the more times you get rejected here, then you start getting people that will just put that are trying to go short. All your bears essentially will have a backstop here to get tagged out. So if this thing does start to run, they get tagged out. And so that's what I call about liquidation spike, is it'll break up above that. Institutions will get it so they can liquidate their long position. Long is going long. This is short is going down. And so liquidate their long position to buy to the downside, and then they start selling off heavily, especially when you got big levels like this. So again, this parabolic move we've had is absolutely incredible. You don't want parabolic moves. That just means you're going to lead to a crash, right? The more parabolic moves you get, the bigger crash you're going to get. So you don't want that to happen. See how this downward movement was kind of like slowly built up? That's the kind of movement you want to the upside, not let's just go straight up. So we are feeding into that. So this was 26. We're almost to that 2 month period to where, so about another 2 weeks could potentially be that pivot point where the market starts pricing in a recession. So you're kind of looking roughly, you start getting your first bank earnings around the 115. So that'd be about right. You'd be sitting roughly around your 2.5 to 3 month period where essentially a price cut would happen. So that's why I'm heavily leaning on, this is why I have developed this thesis, because I know what my baseline is earnings is roughly around February 15th, around that time period, March period, beginning of March period is when everything is lining up to when you're going to essentially have all your industry leaders already reported. You're going to have essentially that quote unquote pause period's been roughly around 2 to 3 months. We can potentially get a rate cut depending on where again, unemployment I think is going to be a big part of that. If there's any black swan events that may occur during earnings is also a big thing, because you might see some really, really horrible numbers during earnings, especially for like the holiday season. It's supposed to be one of the strongest consumer periods. This is why they call this the Christmas rally period, because of that fact. It's supposed to be one of the strongest surges going into the back half of the year. And if that's not the case, it could lead to some pricing in a recession. And then we will have to see. So, again, there's just too many scenarios, right? You can see how you're trying to develop this pattern. If you know where the baseline is, then you kind of align those events with that pattern, and then everything kind of just magically plays out. But again, there's also the unknowns that are always out there, the black swans and stuff like that. So you don't have to really know for sure, but you're looking for the confirmation to play out. And then when it plays out, you can take advantage of that. So again, we will see, but that 4,600 again come Monday will be very important. And again, if it breaks that, right, you're always going to have those. The 50s is 4,650 is kind of like that new psychological level that if once it hits that may be where it liquidates and then comes back down. So you have to play the 50 mark, but ultimately we're kind of waiting to see if it can make it back up to all-time highs if we do break that. So we need to pay attention to that. Again, I don't like the parabolic move. If you're actually bullish, you would want this thing to at least come back to the 4350 before trying to break back up. But if it does not, again, that could be very worrisome. You have to watch this level, make sure it holds, and if it breaks back down below that, I think you're in a lot of trouble. So but again, we'll have to wait and see. So let's take a look at Bitcoin. Bitcoin has been on everybody's radar because it's been going absolutely parabolic. Everybody's jumping in. Nobody wanted it down here, but now everybody wants it up here. And this is something I always say: you buy in weakness, you don't buy in strength. You should not be buying up here when you could have bought all back here around the 2,500. I was talking about the 2,500 level right before this thing started spiking. I was like, it's holding well, DCA, DCA, DCA. And then you can even look back at all my videos, and I've talked about this before. And then now we have this big spike. So, but with that being said, you have to look at the bigger picture here, especially with crypto. This is going to be important whether we finish the month, right? We have this new candle, massive spike up. We've only been in 9 days of December. Something I talked about, we had this heavy selling. We didn't have any break up and retest. The thing just kind of went flat, and it really hasn't done anything. So it's really going to depend if we can hold roughly the 39 level. If we cannot hold that 39K level by the end of the month, this thing can really just wick back down in a matter of seconds. You know, if you've been in crypto at all, you know about the volatility, and this thing could wick quickly below 40. And if it does that, you could be potentially seeing some lower levels. Again, one thing to understand is we don't know how Bitcoin is going to react in a recession period. Yes, we understand that because of the great financial crisis back in 2008, that's why Bitcoin was created. It's to essentially get off the dollar standard, right? People are interpreting gold or Bitcoin as the new gold. It could be a possibility, but you'll see a run up when there's fear, and we're seeing that with Bitcoin and with the gold. Gold got rejected and started selling back off. Bitcoin is still going, but the problem is it runs up, and then when the event actually happens, it starts to sell off. All right, and so these are things you got to start watching, because when it starts selling off, essentially across all platforms, things just start selling off because it's a really bad period of time, right? And you talk about deflation, right? Deflation kills everything, right? And so these are things you have to keep in mind. And so you'll have the run up. You don't continue to hold, right? You need to be you sell into strength and you buy in weakness, right? And so again, something we really have to watch there. It could potentially run. I don't know if you want to start talking about all-time highs and manipulation. If the market starts running to all-time highs, it could push up Bitcoin because of the concern of what's going to happen, right? Bitcoin and gold are a hedge on what's going on with the market, and we saw this not long ago on this last run up here, when we saw people were buying heavily because of what was currently going on and their concerns about inflation before we got the 9%, right? And so, but once we started seeing inflation start increasing, people started backing out, right? People started backing out of all last year. People started backing out because inflation hit 9%, right? And if we get another huge wave of inflation next year, or we get deflation, how is that going to react to the market here? So these are things you have to keep in mind. You have to understand the economy is still going to play heavily into Bitcoin. Bitcoin's just not going to break away and not be affected by the economy, right? These are things you have to be mindful of, right? It's not its own separate entity. It's part of the economy. And so, and I believe it will be there. That's why there's being spot ETFs. But also in the same token, you have to remember that it's still going to be affected by what's going on in the world. It's not going to be its own separate thing that it just nothing happens. So just one thing I want people to be aware of. So with that being said, let's take a quick look at some gold here. Again, like I said, gold hit, again, playing with that all-time high, hasn't broken out yet. So this next year, it could break out, or gold could have a crazy year, depending on how bad. I mean, we're already in a depression. So at this point, we're just going to start getting the numbers, right? Because I said the M2 money supply is historically low levels around the Great Depression. And when that happens, you could get a huge spike. People have been talking about a huge spike forever, though. But you have to understand, as metals have always been manipulated. And I think once regulation comes into Bitcoin, you're not going to see the crazy moves like you thought, right? Like, I think it's going to be heavily manipulated, just like metals are. And so with that being said, we're going to have to watch and see how it does moving forward. So, but gold again got rejected. So that the key level for gold is really the 192. This is GLD. So it's gold spider ETF. So we're watching to see what happens with gold there. Now let's take a look at Tesla. Tesla. So Tesla, there's been a lot of news again about Tesla and what's going on. It's been kind of just chopping sideways. Again, it may not break below this 223 until it actually reports earnings. So on that same token, this thing might actually be up here near, it might actually come up to retest that 300, which I think is a strong possibility, because now we're kind of in earnings mode. So I don't really see it potentially going down unless there's a bigger event that occurs. Again, we don't know between now and essentially earnings. Aside from that, this thing could just start ripping back up and testing that 300 again. If the market wants to break out again, Tesla's going to be one of those front runners, so just keep that in mind. But again, it needs to hold the 233, or else it's going back down to the 200. Otherwise, I think we could be heading for at least the 269, but ultimately I think we're at least heading for another retest of the 300 before a potential bigger correction, but we'll have to see there. Then you have Palantir. Again, hard rejection, selling off. I'm kind of hoping they can get back down to 14. I would like to pick it up at 14 again. Again, they are doing fantastic with AI and security, and it's not just security and the government contracts that they have. I really advise that you look into Palantir, as their business model is they don't really have competition, right? Like a lot of the AIs that are being generated are completely different from what Palantir has had, a very, very long time in this market. And they've captured essentially all the government contracts, and now they're expanding outside of that to private companies. So with that being said, I think they will do extremely well. So kind of really watching that 14. Hopefully I can get a dip down this week to at least fill this gap, and I'll be picking it up there and then see where it goes into earnings. And then after earnings, I'll definitely watch to see where it is at that point. Again, I think it really just depends on where things go, again, moving forward in the new year. Let's take a quick look at Apple. Again, this is what I'm talking about. Apple is at the ceiling. Apple needs to break the 196. There's been upgrades already trying to get this thing over 200. So if Apple cannot break and stay over 200, this is going to be a problem. Again, if this starts selling off, it holds a big spot in the index. So if it does start selling off, it could be a big problem moving forward there. I know this video is getting a little bit long, but then you also have BA. BA, absolutely parabolic. This is what I'm talking about. Like, this thing was just dying off. It wasn't even bouncing, which is a huge problem. And all of a sudden, just V shape. This is not normal. This move here is not normal at all. Now it's trying to break out, going up to the 255. Expect a rejection there, and maybe a pullback here to the 238. So the 238 really needs to hold. Otherwise, this could be a problem. Starting to get some more selling. Again, I don't like this. Is not a normal move. This is manipulation here. When you get actually fear coming in the market and selling off, and then this is pure manipulation. I mean, this stock is heavily manipulated anyway. So I don't really typically like to play BA, especially not options. If you play it, I would definitely play equities or stock, and definitely would not play options because this thing has no rhyme or reason. As you can see, it didn't even hold support. It barely held support, and it just dropped through. So we'll watch and see how that does play out. But then you have the banks, and then good old JPM, same thing. Manipulation, this thing just rocket. Again, pause, official pause, and we are rocketing up 2 months. We could see a major correction, I think, potentially. So just be careful. This move is not good. This is leading to some bad things, like I've stated. BAC, again, the moves are much more diluted in BAC, but same kind of aspect of talking here. And then the same, I think that's pretty much it for those. But yeah, just in closing thoughts, that's what we're looking for. Again, I don't expect much to happen over the next couple of weeks. Really just waiting for the next earnings cycle. Again, we'll get some data with Core. We'll get Powell as well. So keep that in mind. We will get Powell on Wednesdays too with monetary policy. So you have monetary policy essentially come out on Wednesday. I didn't even have that on the thing, but monetary policy will come out on Wednesday. So that is my bad for that. But monetary policy will happen at 2 p.m. Eastern Standard Time. And then with that being said, you'll have Powell at 2:30 Eastern Standard Time. He'll be fielding questions. So again, we'll get our last remarks from Powell this week. So keep that in mind. And then we'll continue to move forward from there and see what happens in the new year. So have a good one. Be cautious. None of this financial advice. And then I will see you guys on the next one.